and it's, it's a little unfair to some of those guys on Fox because they're not the only ones that did that. And to be fair to Ben Stein actually apologized to me, not to me personally, but in a column he wrote in the New York Times. So, he comes off a little bad, but he actually was gracious enough to admit that he should have listened to me, that I was right and he was wrong.
Yeah,
but, anyway, it is what it is, right?
Yeah, that's actually the one that caught me off guard because he's usually, a much more kind of conservative about everything. So they apologize. But so I'm in a position right now where I'm in cash, and I'm seriously considering moving all that into Euro Pacific. But there's a couple things that I'm trying to figure out that I'm hoping you can help me out on.
Mm-hmm.
And so basically to get out of the dollar and get into international stocks or currencies. So I've looked at a couple different things. I've looked at the RIDEX funds and iShares and MERCX and things like that.
Mm-hmm.
Trying to really understand the difference when I invest in something like that versus with Europac, what the differences really are. And then also,
look, you can buy some of those things like Merck through Euro Pacific, but the main difference with what we're doing, and we can buy you any of those other, securities. The main thing that we're doing for people is we're trying to buy them individual stocks, and so they can rate their own portfolio, their own mutual funds. So you eliminate the management fee aspect of it, and we can kind of pick the stocks that we think are not particularly exposed to what's going on in the U.S. Now, as it turns out, many of the stocks that we bought that we didn't think were exposed to the U.S. are not, but their stock prices are still getting hammered because the price of everything is going down. There's no investment that we could have made for anybody that would have appreciated in the last few months. Everything has gone down. The only thing that would have worked was dollars or yen or short positions, shorting stocks. Of course, that would have worked. We could have shorted anything. We could have shorted all the things that we bought, right? And that would have made money if we covered now. But that wasn't my game plan. And of course, with hindsight, of course, if you knew exactly what was going to happen, that's what you would do. But when you try to make your best guesses based on the information you have at the time. And it's hard to anticipate. The U.S. economy is going to collapse. That was something we knew would happen for sure. The rest of it, you're trying to figure out, well, how do you protect your wealth? Where do you keep it? Because we know this disaster is going to happen. And right now, the people who just stayed in cash did the best. But, very few people would have done that. Most people that were bullish stayed in stocks if they didn't think there was going to be a major collapse. And a lot of people who thought there was going to be a major collapse, a lot of them bought gold stocks, and, they're down 80%. We struck a balance by buying a lot of foreign stocks, and we're down a lot too. We're not down as much as some people. But there's not that many people that said, especially a few years ago, that watched the markets going up, that watched gold going up, watched oil going up, and decided to keep all their money in the bank earning very little rates of interest. But as it turned out, for the last few years, that was the place to have been, with the benefit of hindsight. But I'm sure a few years from now, when people look back, they'll discover that wasn't the place to be, not if you stayed there.
Well, one thing that I realized with like the RIDEX funds, for example, that they take money and they put the money into a bank account in whatever country they're investing in that currency. And I'm just thinking, well, if the whole financial thing is still in a state of collapse, is my money safe? Whether it's
there's always counterparty risk, and you got to look at the counterparties. If you want to have just currency and you have a decent amount of money, I like to buy the government bonds of these countries because there really is no counterparty risk there. You own a government obligation of Germany or of Switzerland or or Japan or Australia.
Now, and then one last question. So now I also have Fidelity in my 401k for my 401k in Fidelity, and they have an international stock fund. If I were to buy that mutual fund, am I really buying international stocks?
Sure, you are, but you have to figure out what stocks they own and how aggressive they are in the portfolio, how often do they turn it over, what are your management fees, They could have a lot of stocks in there that are major exporters to the United States. They could have a lot of stocks in there that owe a lot of U.S. debt. So you don't know. My whole idea, since I'm so bearish on the U.S., most foreign funds aren't foreign funds because they're negative on America. Most people on Wall Street think everything is great in America. They just want to have some foreign funds. I am going to foreign markets for a reason. The reason is I want to get out of Dodge. I think America's got some serious problems that we're going to be dealing with, and I think the only solution is not to have your money in U.S. assets. So when I'm buying foreign stocks, I'm buying it through that prism. whereas your average mutual fund isn't. They think everything is great in the U.S., so they probably don't think having a lot of exposure to U.S. consumers and U.S. borrowers, they don't see the problem there.
Right, and the reason I'm asking is because I'm trying to find the most pure play that I possibly can.
Well, I think the purest plays is what we're doing, just buying foreign stocks outright that trade in foreign markets that earn all their income outside the United States, or only a small portion in the United States.
Because even with the Fidelity thing, I mean, aren't I technically I'm still holding dollars, aren't I?
Well, not if they're in foreign stocks, but then also you have to look at their hedging. A lot of some foreign funds ends up hedging back to the dollar. So, obviously all of the Euro-Pacific capital portfolios are unhedged. That's not the case with most mutual funds. But anyway, I got one more call that I want to try to take, and then we'll be done for the day.
Thank you.
All right, let's take the last call of the evening. Rob from Oregon.
Hi, Peter. I appreciate you taking my call.
Sure thing.
This is actually, most of what you're talking about is fairly new to me. And although it makes a lot of sense, I saw a video called Crash Course on the Internet that got me thinking. So the last 3 weeks I've been working with some people of yours in Southern California to try to move some accounts over to Euro-Pacific. And I'm actually doing some stuff for my mother and my sister and myself. All told, but between all of us, we have about 1.4 million and about 10 different accounts, lots of retirement accounts and annuity and other stuff, so it's a little bit tricky to get it all moved over. Based on reading your book, I read much of your first book. You seem to be like 100%. Let's move out of the U.S. dollar. Even while talking to some of your brokers, they seem to be a little more, a little less. They're not pushing anything on, on the. I guess my question is, my feeling after.
Well, we don't want to push anything on anybody. I mean, people have to make their own decisions as to what they want to do with their money. If they believe what I'm saying, if they think maybe I'm right, it depends. It's hard to tell somebody. You got to decide what you want to do. You got to examine the facts. You got to take a look at what I'm saying, and you can look at what other people are saying. You can draw your own conclusions. I mean, I've said personally, I think the dollar's going to collapse. And it doesn't make sense to own dollars as far as I'm concerned. Now, in the short run, sure, there's always a chance the dollar can go up, like it's going up now. But I don't invest for the short run. I don't have time. I'm not a trader. I'm earning in the short run, I work for a living. And what I do is I take the money I don't spend, which is the vast majority of it, and I try to preserve it someplace in an investment that I think will appreciate over time and it will provide me with a dividend stream. And I don't have the time. If I spent all day long trying to figure out what the markets are going to do on a day-to-day basis, I wouldn't be able to do all the other things that I'm doing, which I think are more valuable.
Right. Well, actually, I think in many respects you're a little more optimistic than me. I happen to have a biblical perspective, which means that at some point I think maybe there is going to be, I understand that you're not, you're certainly not a conspiracy theory type person. I'm a little concerned about the fact that I believe it's possible that maybe there are forces that might cause the entire, Well,
if that's the case, we're screwed no matter what we do.
Well, that's basically why. Exactly. So, but I did have a couple specific questions that I was, thinking. First of all, actually two. Is it why? And I'll ask both of them up front here. Is it reasonable even to borrow? I own my home outright, and supposedly somewhere around, I could probably get $350 for it at the moment. Is it reasonable to take out a loan against it, even for the next couple of years or whatever? I've got a line of equity. Would it be reasonable to do that, or is that too risky or dangerous? The other thing I have is my mother has a variable annuity. It's got a cost basis of about $100K, but it's up to $330 now. She may, her health isn't so great. She'll probably never need to use it. There won't be a step up in cost basis, because it's an annuity. I'm wondering if I should we should